Solomon is about to revolutionize the stablecoin industry with the upcoming launch of their brand new product, Yield as a Service. Welcome back to another episode of On-Chain Trenches. As always, my name is 𝗬𝗵𝘁, and today we're gonna take a deep dive into Solomon, a Solana native stablecoin that just launched a few weeks ago at 𝗪𝗏 and is currently offering 11% API on your stablecoin holdings. In today's video, we're gonna take a closer look at USDv, Solomon's native yield-bearing stablecoin, and YaaS, which stands for Yield as a Service, their key innovation that will change the stablecoin industry forever. Furthermore, we will take a look at the future revenue potential of the Solomon protocol and how I think they could achieve 1 billion in annual revenue pretty soon. And towards the end, I will share with you my bull case thesis for the Solo token. Alright, without further ado, let's directly jump in. First off, what is Solomon? Solomon is a Solana native stablecoin protocol. You can think of it as the Athena of Solana, as it uses a similar revenue generating mechanism as Athena does, but on Solana rather than on Ethereum, namely using a delta neutral strategy to generate yield on your stablecoins. But more on that in a second. Furthermore, they have USDv, their yield-bearing stablecoin that currently gives you 11% of annual earnings. And finally, YaaS, Yield as a Service, their major innovation. Solomon just had their ICO a few weeks ago, probably 1.5 months, if not 2 months, and they launched a ownership coin via 𝗪𝗏. In total, the team was able to raise $8 million from more than 6,600 unique contributors, and thus far Solomon holds the record in raised money, 8 million, and they had over $100 million committed to their ICO, which is just bonkers. And yeah, in the end, the team decided to take 8 million out of these 100 million, and the rest was sent back to the ICO participants. But what does it mean to be an ownership coin? So first off, there is no differentiation between equity and token, since equity stakes don't exist. This means that the token is the sole economic beneficiary and owner of the protocol itself. This means that the treasury and all the assets in it belong solely to the token holders and are fully controlled by token holders, as well as the brand and the intellectual property of the protocol itself, all the liquidity that sits within it, and all future cash flows. So 𝗪𝗏, the co-founder of Solomon, says this is what we mean when we say own the dollar rails product offering. So as we said before, USDv is Solomon's native stablecoin and their main product, and you as a user can opt into 2 services. First one, you can stake USDv and turn it into sUSDv and lock it up for 7 days to earn 10.9% yield on top of your stablecoins. You simply park them and they generate yield on your behalf. Or second, this is where Yield as a Service comes into play, which was tailor-made for LPs, treasuries, larger wallets, or neobanks. And here the users have to opt into this service by indicating a designated address that will receive the yield on a continuous basis. But before I tell you more about Yield as a Service, let's shortly double-click on USDv. So USDv is a Solana native stablecoin that is fully backed by crypto assets, designed to maintain a one-to-one peg to the US dollar while generating yield for its holders. So how do they generate yield? It's pretty simple, by using the delta neutral strategy. So in order to play out the delta neutral strategy, you take 50% of your spot holdings, let's say SOL, and go long, while the other 50% are shorted on perps. This way you are delta neutral. Let's say the price of Solana goes up, and here you make a profit, while the shorts will lose, and you always maintain the same exposure to Solana and the same dollar worth. And the way you generate yield is by earning the funding rate. Most of the times, people that are short on perps earn a positive funding yield or funding rate. This means the majority of the market is long, hence being short, you earn 5 to 20% API every year. And since you're delta neutral, you simply earn this yield, and this yield is then redirected to USDv holders, and that's how you generate yield owning USDv. And very soon they will introduce T-bills to the mix as well to make their revenue income more reliable and more diversified. Now, you might ask, how is USDv backed? And big shout out to Solomon, they're super transparent and everybody can access this infographic here and check every single moment the full collateral that is backing the stablecoin. As of now, we see that roughly 74% of the entire TVL is held by an institutional grade custodian, 𝗬𝗪, while the other 53% are held on-chain, earning yield for us in vaults and a little bit in the yield distributor. And here is the asset makeup of which those holdings are composed. So yeah, a little bit more than 55% is held in stablecoins like USDC and USDT, which will soon earn treasury yield for us. And the other half, or 44% of the collateral, is held in Bitcoin and Solana, playing out this delta neutral strategy, earning roughly 10% yield on our behalf. And here a short overview of the USDv supply. So the protocol has been live more than 1 year in closed beta, as we see here, where they had a little bit north of 1 million in TVL just to tinker around and experiment with all the mechanisms. And the protocol ran without major hiccups for this entire period. They went through the October 10th crash without any major issues, and now they are slowly ramping up the USDv supply and open it up for early beta access, and soon they said they will open it up to the public, and then I expect this chart here to go parabolic. Cool. Now let's talk about their major innovation, yield as a service. So think of yield as a service like this yield engine or this yield distributor that routes yield wherever it is necessary or currently demanded. And there are 3 major use cases for YaaS. The first one is treasuries. There are a lot of crypto native treasuries out there that hold lots of stable coins that are non-productive, just sitting idle there and not generating any yield at all. So now people can swap their USDC, USDT into USDv, making their stablecoins productive and earn yield. And then the yield router will on a daily or weekly basis send yield in form of USDv to their treasury. Another key beneficiary or target audience for YaaS are LPs. So picture this. Most LPs, which stands for liquidity pools, they have a stable leg and a token leg, let's say Solana and USDC. But here, the stablecoin is not earning any yield. So now liquidity providers can opt into YaaS and earn also here on the stablecoin leg yield on their stablecoins, let's say 6-7%, which is then automatically paid to a separate address that the liquidity provider indicated in the YaaS agreement. And then finally, we have neobanks that are holding USDv on behalf of their users. So imagine there are thousands of neobank users that all hold stablecoins or simply dollars in their neobank account. And now the neobank can opt into yield as a service on behalf of their customers, making their idle sitting stablecoins earn yield on their behalf, and then they can just forward that yield to their users. On top, YaaS can also be used for limit orders. Let's imagine we want to buy Solana for $125. Hence, we go to Jupiter or our favorite DEX, SEX, and we set a limit order at that specific price. But if you use USDC, sometimes it takes weeks, months until your limit order gets filled. But if you put in a limit order in USDv, you passively earn yield while you are waiting for your order to get filled. And yeah, that's a super, super cool innovation. And I'm looking forward to try it out for myself. USDv or DAI. A big shout out to Decentralized or DAI, a hardcore MetaDAO supporter and ownership coin proponent. So yeah, if you're interested in those topics, make sure to give him a follow on X. And he came up with this theory, USDv or DAI, which I really resonate with. And it goes the following way. Now, with USDv, liquidity providers can also earn yield on the stable leg of their position. So here I prepared this example. Here we have the normal liquidity pool, which consists of Solana and USDC. And here we have the more advanced liquidity pool with Solana and USDv. So as always, liquidity providers, they earn money from the swap fee, which is usually 0.2%. So every time somebody swaps within this pool, liquidity providers earn yield. But now with USDv and yield as a service, liquidity providers can earn additional yield on top of their swap fees, which currently is around 11% API, by simply swapping USDC with USDv, and then they get streamed this additional yield to a separate wallet. And this triggers this very cool effect that folks liquidity providing with USDv can lower the swap fee over here. Hence, more volume will be routed through these pools compared to the old pools. And as more volume gets routed through these pools, here liquidity providers will earn more revenue. And this then creates this positive flywheel, since traders will only route their swaps through this pool, since here the swap fee will be lower than here, and liquidity providers will just earn more money since more volume is routed through these pools. Hence, everybody else has to adopt to USDv or they will simply die. And this is one major reason why I am so bullish solo, since yeah, if you just think from first principles, sooner or later, if they are able to roll out USDv successfully, every stable pair of a liquidity pool should contain USDv. And that's what makes YaaS a killer product. With current stablecoins, we have this major problem that you as a stablecoin holder, either you have to opt for liquidity, but then you earn zero yield on your stablecoins, or you opt for yield, but in order to earn yield, you have to deposit your stablecoin into a vault or lock it up for an extended period of time. Hence, you lose liquidity. And YaaS is basically the solution of this problem. The key innovation that YaaS and USDv brings to the table is splitting the asset from its income stream. On one hand, you hold the stablecoin, and on the other hand, a separate wallet. That's where all the yield is directed to. And yeah, this makes it strictly a better dollar. You can hold USDv always perfectly liquid and no rebasing, traded at $1, and simultaneously earn yield, which is automatically streamed to a separate wallet of your choice. And here we have 𝗬𝗪 stating, once YaaS is live, there is no logical reason to hold non-yielding USDC anymore, aside from inertia.
You're touching on a really important point. This is I think I need to maybe talk about it more. I just don't want to distract people from what we're building, in the sense that really a big unlock is this routing layer that we're creating, right? And it's a generalized solution such that it's actually applicable to any token that is capable of earning yield or wanting to distribute yield. So think LSDs, think SOL, think Stable, think anything that has the necessity to be a wrap token on chain, we can abstract that way. That is a generalized solution. Then that's how we're constructing it. So yeah, it's the dollar, the stable coin is sort of like a primary use case that's going to show people the value here and what it can unlock. But it's a much bigger play than that.
Here we heard 𝗬𝗪, the co-founder of Solomon, stating that YaaS goes beyond USDv and they have much bigger plans. And yeah, using YaaS for their very own stablecoin is just the first iteration and the go-to-market approach to demonstrate the power of yield as a service. And here we have a similar statement by 𝗬𝗪 that he shared in the Solomon Discord, where he says that YaaS is the infrastructure that can take yield from different sources and route them programmatically to LPs, treasuries, or any other recipient. So anywhere there is yield, YaaS can be applicable. So think of LSDs, they generate yield on behalf of their users, alternative stablecoins, RWAs, or any other assets that earn yield. They can opt into YaaS and expand the reach of the Solomon protocol. And to showcase the world how YaaS functions, they decided to use USDv as their go-to-market strategy first. And yeah, that's alone already a massive market. YaaS is the killer product for neobanks, as they can use USDv on their backend. And this makes it possible for neobank users to hold dollars and spend them normally, while the neobank in the background captures yield via the YaaS stream, which can then later on be shared with the user. And this process solves the last mile problem of getting crypto yield to retail users. And as 𝗬𝗪 one more time said, yield as a service opens a world of possibilities, and neobanks are set to benefit most from this unlock. And just 2 days ago, Solomon and 𝗬𝗪, one of the fastest growing neobanks out there, by the way, it's also a MetaDAO product and a ownership coin, they announced a partnership that 𝗬𝗁 is about to integrate YaaS into their live neobank product, making idle sitting dollars in their neobank earn yield for their customers. And this will be a major UX unlock for 𝗬𝗁 and all its users, since they no longer have to move funds around to lock them up or to deposit them within the app into a separate earn product. All that will happen in the background. The users, they simply hold stablecoins or dollars in their wallet, 100% liquid, while earning yield in the background. Here we have a sneak peek into the yield as a service dashboard and how it will look once it goes live. What they simulated here are the earnings of different ownership coin LP positions like 𝗬𝗁, 𝗬𝗪𝘁, 𝗬𝗪, or Solo, and how much these liquidity positions would have earned if they opted into YaaS, and that's a breathtaking $93K over the last few months if they only had opted into YaaS. So they basically left 93K on the table, which they could have earned by just clicking one button and opting into YaaS. And this really showcases the enormous potential of YaaS. And yeah, here is another post of the Solomon Labs, and they are saying we're just getting warmed up, loading 85%. So I expect YaaS to go live in less than a month from now. And here we have Steve, the head of growth of Solomon, stating, don't leave yield on the table, especially if you are a liquidity provider. Any pool with a stable leg should be using USDv. And if you want to learn more about YaaS and get whitelisted for their product launch, feel free to shoot Steve a DM. And as we see here, he quote tweeted the Meteorite Collective, which I guess is a subsidiary of Meteora. And yeah, they're basically bull posting USDv here. And I'm not 100% sure, but I mean, if they are teasing a collaboration with Meteora here, one of the largest dexes on Solana with more than 500 million in TVL, this could be a major unlock for Solomon and USDv, because I guess Meteora holds at least, let's say 20% of that should be in stablecoins, or 10%, 50 million in stablecoins, which could just be swapped out and replaced by USDv. Alpha alert, guys. I caught something that 𝗬𝗪𝗁 said in a recent interview that most people out there missed. Namely, Solomon is preparing a proposal to convert their own treasury from USDC to USDv. That's more than $7 million at the current moment. But why does that matter, you might ask? By doing this, they are establishing a legal and technical framework for other DAOs to easily move their treasuries into USDv with one simple click. And as you know, Solomon is an ownership coin, hence I expect many other ownership coins to follow suit. Think of MetaDAO itself, Loyal, 𝗬𝗁, 𝗬𝗪, and all the other ownership coins out there. They will eventually, I guess, migrate 50% of their treasury holdings, namely USDC, into USDv, as they want to earn yield on their idle sitting stablecoin, expanding the runway and growing their treasury. And now picture this. Ryan Connor, I guess he is the lead researcher at Blockworks Research, and his #1 prediction for 2026 is that ICOs are gonna realize product market fit, and he forecasts that more than 200 ICOs will launch on MetaDAO this year. So I did some quick math and just ran with his assumption that there will be 200 ICOs on MetaDAO this year, and I suppose that the average DAO will raise 2.5 million from retail and VC investors alike. And then I said that 50% of their raised money, or their treasury, will be converted into USDv, which would make the TAM, the total addressable market for USDv, only within the MetaDAO ecosystem, $250 million. And here I would like to shortly share with you the launch process of a ownership coin on MetaDAO for all of you that are not familiar with this process. So whoever is gonna launch a coin on MetaDAO, they are offering $12 million to the community, and 2.9 million are being redirected to a liquidity pool. So everybody that is interested in this protocol here, in this case it is 𝗬𝗁, they can deposit USDv into that smart contract for 4 days, and once this period is over, the committed capital is being sent to the protocol's treasury, and the investors receive their tokens in exchange And yeah, around 25% is automatically put into a liquidity pool, which is owned by the protocol or the DAO itself to seed initial liquidity. And this very process offers two opportunities for USDv and yield as a service to come in. First, in the treasury itself. Let's say they raise 10 million, then probably 2 million goes into the liquidity pool and 8 million will be kept in the treasury. And from that treasury, arguably 50%, as we just discussed before, can be converted into USDv, earning yield on behalf of the protocol. And here on the liquidity pool, it just makes sense to swap all USDC directly into USDv so that this idle or passive liquidity sitting inside the liquidity pool earns yield as well. But what about the revenue mechanism for the Solo token itself, you might ask here? And yeah, that's a very fair question. We now know how USDv users can earn yield, but what about the protocol itself? And here, 𝗪𝗪, he says that in the first phase, they are doubling down on growth and they are trying to keep the yields as high as possible to attract as many new users as possible with the North Star to maximize TVL and build a moat around yield as a service. Then in the phase 2, once they have grown their TVL into the billions and have created that moat around their business model, they can flip the switch and activate a taker fee or a revenue cut around 10%. I guess the 𝗬nci𝘂, for reference, takes a 20% revenue cut. But I suppose, yeah, the revenue cut for Solomon will be 10%. And then this revenue can either be distributed and paid out directly to Solomon token holders. And the beauty here, like the yield distributed are stablecoins themselves, namely USDv, or USDv can be used to buy back the Solo token on the open market to create buy pressure for the token and potentially lift up the price. And what about the TAM, total addressable market for USDv? So here, look at this list. I derived it from another Discord post of 𝗪𝗪. And yeah, what he basically says that the total stablecoin market cap right now is a little bit more than 300 billion, and 150 million of those stablecoins are sitting idle. So that's the addressable market. All this money here could opt into YaaS and earn yield on top. And yeah, those idle sitting stablecoins include stablecoins sitting on DEXs, unborrowed stablecoins, so stablecoins that are supplied in borrowing protocols but are unborrowed, then stablecoins sitting in DEX liquidity pools, as we discussed before, crypto treasuries, and big DeFi wallets. Based on these numbers, I tried to forecast the revenue for Solomon going forward. And here I prepared a bear case, a base case, and a bull case forecast with different underlying assumptions. Let's start with the bear case assumptions. Here, I suppose, or I forecast, that USDv will take a 1% market share of the total stablecoin market cap. Then USDC will pay out 10% yield to its holders, and eventually the protocol will take a 10% taker rate. And to come up with the final valuation, I supposed a revenue multiple of 8. So again, the numbers on the current stablecoin supply, 300 billion, 150 billion are idle, and 1% of that market share would be 1.5 billion. Hence, Solomon would generate a gross yield of 150 million. And if they take a 10% taker fee on that revenue, the protocol would make, in this bear case, 15 million of annual revenue. And if we then multiply this number by 8, we come to an implied FDV of 120 million in the bear case. Yeah, you can stop the video here and just go through those other numbers. Just one final remark. I have divided every scenario into bear, base, and bull case. And here the base case is that I expect the stablecoin market cap to grow to 1 trillion over the next few years. And the bull case takes the SEC forecast, where they say that stablecoins will achieve a market cap of 3 trillion by 2030. And that would give Solomon a valuation of 0.2 billion. And as of now, you can buy Solomon for 10 million on the open market. And of course, for the base case, the numbers are much higher and the bull case will remain private and only on-chain tranches plus members have access to it on our Discord. So if you want to get access to this full sheet, you can join us and you will find the link to on-chain tranches plus in the video descriptions below. But TVL is not the sole indicator we should use to estimate the future value of Solomon. Also, YaaS should be considered, as 𝗬𝗂 shared here on Telegram. He says that TVL alone underprices what we are building. YaaS isn't just a feature to attract USDv TVL. It's an infrastructure layer that can stream yield to whatever asset wants it. Stables, LSDs, treasuries, apps. So to get a more holistic picture, one should really account for all the assets and balances that cross the ecosystem and are routed through the Solomon YaaS infrastructure. And to realize this vision and to take YaaS to market faster, Solomon is expanding their team. They are bringing on a young, sharp developer. He is ex-Google, ex-Superteam, and participated in multiple Solana hackathons and won there as well. And he will be joining the team working on shipping YaaS. If you want to follow him, it's 𝗪𝗂 on X. And that's why I am so bullish Solomon. They are growing their team. They are still flying under the radar, and with a market cap of 10 million, they are a diamond in the making. And I always wanted to get some exposure to stablecoins, and now finally with Solomon, the opportunity is here. And I truly believe that YaaS has the opportunity to grow into something big. And of course, there are a lot of roadblocks in the way and risks involved with this investment. Do your own research. This is not financial advice, but I am willing to put a small percentage of my portfolio behind this bet. So yeah, I hope you enjoyed this content. Thanks for watching, and please do me a favor, hit the like button and smash the subscribe button below this video. And if you want to get a closer look at my personal portfolio holdings, how I am trading ownership coins, which of them I hold and how big my positions are, please feel free to join us at On-Chain Trenches, a passionate community of DeFi power users, on-chain trenchers, NFT lovers, and so much more. That's it for today, guys. Thanks for watching. See you in the trenches.